With exchange rates, there are no absolutes, and everything is relative. That's exactly how it worked with COVID-19. Can the coronavirus infect a currency? From the perspective of fundamentals, the influence of the virus on currencies works its way through the channel of changing expectations of economic growth. Here's how it goes. Countries with healthy economies have the ability to attract global capital flows, and capital flows are an important driver of exchange rates. When the virus first hits a country or region, expectations of economic growth would be downgraded in fear that parts of the economy might need to be shut down. Then, as a country gained better control of the virus and daily cases declined, optimism about the reopening of the economy would take control of the narrative. To help explain some of the currency moves, let's take two case studies, the Chinese yuan and the euro relative to the US dollar. The Chinese yuan initially weakened during the early stages of the pandemic through to the end of May. From June onward, though, it became apparent that China had made progress in controlling the spread of the virus. The economy came back strong, which can be observed in the comeback pattern of domestic air travel. At the same time, in the summer of 2020, U.S. economic expectations were hit by another wave of the virus. The relative juxtaposition of the virus being contained in China and still spreading in the U.S. was part of the reason why the Chinese yuan rallied strongly in the July-September period. Now let's consider the case of the euro. Europe, especially Italy, was hit hard before the virus came to the U.S. Then, from a low point on March 20th, the euro rose over 10% through the end of August versus the U.S. dollar. What halted the euro's rise was the growing evidence of another wave of the virus taking hold in Spain and France, among other countries. Here's the real story, according to an economist. Can currencies really be infected by the coronavirus? Policy shifts still matter, as do political risks. But in 2020, tracking the relative progress of the virus was critical to understanding currency movements.